Boy, Samir Arora, were you prophetic? September 20th was the day when the markets seemed to decide that the government is indeed listening to them, and then a rally ensued. What's the mood now? I mean, are you a lot more bullish than what you were the last time that we spoke?
Yes, because I follow what I say. I actually use this line first time with you, and then I used it in my monthly letter that the government these days looks at the market more closely than even I look at it, which is very positive. And they are trying, even if they miss on a few things by hit and trial, they will get everything right, provided they had that mindset, and they seem to have that mindset now.
Yeah, well, that certainly seems to be the big change, Samir. However, I just wanting to understand. I mean, I think a lot of conversations that we do with people seem to be centered around that if the government has indeed done all of this, if the FPI surcharge has been reversed, etc., foreigners are still not coming in. It's probably not as simple as that the government reverses a few things and foreign money starts coming in, right? Because there's global things that the money managers have to take into account as well. How do you dissect this piece of the puzzle? What's your opinion there?
It's actually even simpler than that. If for 3 days the market is up, fourth day they will come. It's just a matter of time. I don't give so much credit to the intelligence of a foreign fund manager. I mean, they are just like Indian fund manager and maybe less clued in. Right now, if the government does it right, they will all come. It can be a matter of few weeks here or there. Even now, if you look at it at a gross level, nearly every divestment, any QIP that is announced, nearly all of them are taken up by foreigners. I'm not sure whether those numbers come into the daily FI numbers, which are done as like a block trade or a direct new issuance. But you see, any of them, all of them have been taken up. And in general, if for 2 months, if they were okay till July, whatever they may have been disappointed in the July budget, it is true that if all these things had happened in the July budget, then the budget would not have been a disappointment, right? So if you see, it is just their laziness and sheer momentum that, we were disappointed in the budget, but budget is over, and now you look at it as a 2-month announcement as one budget. They were buying till 1 week before the budget. And whatever they may have expected from the new government, as in government coming back the second time, that they will do reform, now they are doing. If the government can privatize these strategic big companies and, which are politically, I think, difficult to do, and they are doing it, and then cut corporate taxes, which is the most politically difficult thing to do, then other smaller reforms will be easier to do because you've done the big one.
Right.
So, FIIs are, currently doing the right thing. They will come back. Don't worry about them. I'll bring some of them back through my fund.
All right. Samir, good morning to you. We were having a conversation with CLSA yesterday, and they suggested that in the last 1 year, India has somewhat become a hope market. So, when you started investing in India as a market, it was a hope trade that, okay, they will deliver. You will see those numbers kicking in on ground. And now the mood has shifted to show me the money. Where is it? Where is the growth coming from? What are they going to deliver in terms of earnings? So, is this shift something that's keeping investors at bay?
Could be, because people look at their most recent experience. That's what I'm saying. If you look at the FII flows, literally before the budget, we had about $12 billion this year, and from the day of the budget till now, mostly they have been selling every day, not realizing that the budget has been rewritten. So if budget was the technical point on which, because if you see, it happened from the day after budget or maybe the same day of the budget and then continuously till now, except for a few days, without realizing that the budget is no longer there. It's a new budget in some sense. Now show me the market can be done. But what ultimately the investors are looking for is earnings. They are buying earnings. They are not really buying economic activity as long as those earnings are sustainable. So first of all, for this year, you've got an additional 8-10% just because of taxes. These are not one-off benefits to be written off and say, no, it is not sustainable. It's a permanent benefit. But basically, this time leads to an 8 to 10% increase just on that account. 8 to 10% increase means that the market has been given maybe 6 months return in one shot. So for 6 months, they should not object or question. And in the meantime, the economy turns. But the main point is, I can't imagine that the government stops at this. that it does the most politically difficult thing where you give money to the rich, to the foreigner, to the big companies, to multinationals, and then you don't do anything else for the rest of the economy. And that is why I think it is to be seen as a precursor of many things which, for example, BPCL privatization, could anybody have imagined? I would have been willing to bet $1 million that will never happen. Now that they are doing it, it looks such a big deal. And you need five such things. You need a few big multinationals to announce that they're coming into India because of the 17% tax rate, or you need Apple or somebody to announce. You need, a few divestments, and then you can say that it was not just a one-off tax cut. And all of that is now, I think, very, very mentally and philosophically and psychologically easier to do.
Right. And we actually, we got a sense of that from Prime Minister Modi's speech at his recent Howdy Modi rally. And he pointed out that corporate tax cuts were just the beginning of it. And, made a push for many companies to come and take advantage of India, set up manufacturing hubs in India. And he said that the growth story is going to come back in a big way.
And also at the Bloomberg Forum, he said that the equity taxes will be in line with some global benchmark or something like that, which basically means that whenever the next pressure point comes, we have to get rid of DDT because that is not in line with global practice.
So you think that could come about next?
No, because he said it. I didn't say it. We are not recommending. He said it that we will bring equity taxation in line with global tax benchmarks or whatever, something like that. And so in equity, what are the things? According to me, there are two things which are not globally benchmarked. One is tax on foreign portfolio investors, because they should be taxed in their home country. And second is DDT, which in every investor should pay based on his, treaty with the India, whatever India versus whatever that country, and for Indians to pay as per their tax bracket.
Samir, a much spoken about topic, so maybe some people find it boring, but I find it astounding that the quantum of period for which this polarization in the market has seemed to have lasted, and not just the Nifty, but even the broader markets, insurance companies, for example, or AMCs. People are just buying those select few stocks. In your experience, can this last for a period of time which is not possible to calculate, or at some point of time, value stocks start finding some favor? How and when does that happen?
No, don't even say value stocks. Anything outside these 10 stocks, we can say, or 20 stocks. We also own some of these stocks, but we believe in a mix and match strategy because actually I don't think it is sustainable. Simply because let's take some company, which actually we also own some of these examples, so I won't give you the name, but let's say some company A which has given a return of 20% per annum for 20 years and everybody likes it, including us. But the point is, it gave that return because when the 20-year period started, its P was say 20 and now it is 40. And so the one part of the reason why you got a 20% or some such very good number for 20 years is because you didn't start with a 40p. You started with a 20p, let's say. Now, in many of these companies, by the way, as I said, even we own 4 or 5 of them out of the 15 or so. The Ps have continuously gone up. Actually, for the whole 20 companies, let's say, the Ps have gone up every day and they're at an all-time high every day, the PE. And so today to say that the earnings will be whatever the 15-20% range, but the Ps will hold because that is the current PE, actually, according to me, is not really sustainable. But we believe that we want to do well broadly in every period because you don't have to be number one in any period, but if you are in the top 5% in 3 years, then you're number one over 3 years because the rotation of style, the rotation of companies, rotation of fund managers, we have seen that nobody really is up there as a strategy. So we want to do a slightly more mix and match, but I don't think it is sustainable because the valuation has been there for one day because it goes up every day. So how do we know that the valuation will remain? Forget about the earnings.
That's a fair point. It's just that somehow whenever people have tried to do the other, until now at least the market doesn't seem to have rewarded, and which is why. So I'm trying to get your sense now. If you are putting in fresh money or if you're shopping, are you looking at value? Are you still?
It's a mix and match. it's a mix and match. We are now buying even the most distressed private sector banks. It is a mix and match. The whole game is that to think that somebody dropped this formula from the top of the heaven and now you got it. As I said, we also own some of these and may even buy new, but we are not going to make any of the strategies as our core because over time things move. And broadly, if you can weed out the very bad on various parameters, you actually don't have to buy the absolutely best company that has ever been formed because you need to buy a stock. And the stock sometimes is more than just buying the best company. This best company formula is working because the times were bad from 18 to now, and times will change because if times don't change, then that means India is doomed that only 20 companies will be rewarded. So I also own a few of them, but I'm just saying it cannot be a all or none strategy.
Right. Samir, just let me get you, and since you were talking about valuations, the fact that in each of these pockets, some of the valuations are just eye-popping, just to figure out, Avenue Supermart's trading at about 1900 yesterday, but 93 times or so. You've got Bajaj Finance at about 10 times book. All of these, do they make you wonder whether or not, you're assigning such valuations to them, but the earnings projection and the probability of them, the earnings catching up to these kind of valuations in such a market, in such an environment where the ecosystem is probably not all that conducive, at least for the time being, may not really show up.
So I'm just saying that there are 20 such companies and we own five, six of them. And together, whatever their weightage be, but we also own others because first of all, we don't know how long this will last. And for the ones we own, we hope that they last forever. But philosophically, I know it cannot be like this, that only 20 companies do well and that somebody says that I only follow 25 companies because these are the best things in sliced bread, because their starting points over which the returns have been calculated were very different. And so I agree with the broadening. If you believe that the markets in the end are going to be okay, then it has to broaden by definition. By broadening, it means that others have to do better than these 20. Otherwise, it does not broaden if the same group continues to do super well. But since we believe that 30, 40 stocks or 40 stocks is better than 15 stocks, for us, we can handle all kinds of things. Why should a fund manager say that I am a growth manager and not a value manager? The thing is, you have to justify each stock. Some stock could be justified because it is extreme value, and some stock can be justified because it is high growth and there is a long runway and there's a big opportunity and the management is very good. What is the mental issue in being able to put both these stocks in one portfolio because they both make sense separately to you? And so I only buy stocks that make sense to me. They could be the worst possible companies that this world has seen, but somebody has to convince me or I have to convince myself that it is even cheaper than that and I will buy it. And similarly, I will buy the most expensive, saying right now for 2 years, their room is good, the market environment is like this, there is a preference for this, I will buy that. There is no need to. In a small country, by the way, India's weightage in the world is maybe 1%. People of our experience and history would be managing world funds where they are investing in 50 countries. And we in one country, our own country, can't buy growth and value because it confuses us. No, it doesn't confuse me. So I buy everything.